Good. Okay. Alrighty, so this is gonna be a review slash basically just my thoughts on a price action for Starbucks. I got brought to this by my friend. We were talking about other charts in the coffee industry that I will be going over as well at some point. But today we'll be talking about Starbucks to start off. So basically on the high time frame here, this is going to be on the weekly. We are looking at crazy distribution schematics right now. So if I just had here, let's just clear the whole chart basically. All right. So as we can see right here, market maker's been obviously accumulating this chart for literally decades on decades now. But as we can see here, market maker's making higher low for higher highs. We pull range from top to bottom here. Technically, this was a previous accumulation back in October 2015 all the way to October 2018. That's about like a 3-year accumulation, right? So this is basically all demand, very strong market maker demand right here. As we can see, when market makers push price up on the breaker structure, this was $50 level. Market makers made basically a 2x, but wicked the $100 before coming all the way right back down to $50, which is actually pretty crazy. If you had to ask, from 2018, when did market makers wick that $100 when they accumulated back in the 50s? That was in July of 2019, which was the summer. I believe that was when COVID was already starting to hit the headlines and news and stuff, which is pretty interesting, right? So anyways, we pull market makers from market structure from top to bottom. Now this right here would be considered our first deviation. Boom. Now touched equilibrium, came back up. This right here, the way that market makers are in a way playing this DL2 range, this would be considered a PO3 distribution. Specifically, it would be a model 2. Boom. See, the way that market makers even respected this DL2, boom, boom, came up just to finish the range, because this was technically some type of market maker demand that made market makers bounce price to come back down to finish the schematic, right? Boom. So that gets finished off. This will be considered our second tap for the highest time frame short here on the weekly. Now we pull our range now to this deviation. Okay. Now this is some type of market maker demand. When it came down after creating that tap, this was some type of demand here that market makers bounced off from, made some type of accumulation here. There's your first tap, second tap, third tap, came back up. Now this was some type of mid time frame distribution. Here, we'll also zoom into that. We'll do the work. Where are you? There you go. Okay. All right. So market makers are making higher lows for higher high. Oh, see, this is kind of nice right here. Market makers beforehand created a distribution model, really on the mid time frame, to really actually accumulate back up, right? This is accumulation right here. We'll even pull the range, fuck it. First tap, second tap. This is demand right here. This is even some type of little accumulation as well right here. You can even did 1, 2, depending on how you'd look at it. You can either say this is your first, second, and third tap, or you could say this is your first, second, third tap. But regardless, market makers were accumulating here in the $80 range back in October of 2022. So this is very important. Now market makers accumulated up to create the mid time frame short here. All right, pull range, higher low for higher high, right there. Now as we can see, this is our first tap. smaller because it's just a mid time frame. This would have been considered your second tap right here. First deviation, second deviation. Sorry, it's gonna be this one. Now, while creating the mid time frame second deviation, market makers even filled more positions for the distribution here. Made another low time frame schematic as well. Higher low for higher high, first deviation, second deviation. Actually, let's zoom in even more on this. It's the fact that market makers wicked this right here, that right there, full put your positions on breaker structure, of course. There's your second deviation, so boom. And then now there's your third deviation. Your entry would have been somewhere around here. Stop loss below the third tap, target the end of range, 4.8. Now look how clean that is. Oh my gosh, the fact I didn't even like rehearse this, but literally look on the TP target, market makers literally hit their bodies, wicked the DO, took profits here, and just came right back up. But what did they do? They didn't just come back up all the way, right? Obviously not. They took profits right here. They pushed price back up just to re-short it again. This is some type of low time frame distribution again, right? First tap, second tap, third tap, just to re-short right back down. Now, honestly, my TP would have been all the way down here, so I wouldn't have been able to catch that, right? But if you were an absolute degen, you could have, if for whatever reason you didn't have your take profits set right here, you would have even tried doubling down on this. Made another 4RR. Or I know there's even other traders that would have tried to target this demand zone right here, which, I mean, oh my gosh, you would have made so much bread off of that as well, right? I don't trade like that, but definitely a play. Because obviously here, market makers first tap, second tap, third tap. Market makers accumulated on that demand zone, clearly. First tap, second tap. It's kind of iffy for the first going into the second, but we know that right here, this was some type of distribution to create that clean second tap here in the DL tool to grab all of this, what's it called, demand. So technically it's still valid. I'm curious though, what's the vol tool on that? Clean as fuck. That's crazy. Okay. Now it comes back up, That was March of 2023. That's crazy. Comes up. Now this would have been your third deviation for the mid time frame short. Comes down. This would have been your entry somewhere around here. Would have been very aggressive, as you can see, because market makers made a gap in price. You would have taken this all the way to this TP target here and the end of range. Oops. 6RR. Insane work in May of 2023. Okay, anyways. All right. Now, oh, and another confluence. Market makers right here. This is technically super heavy supply, right? That market makers wanted to accumulate their short positions off of, which is clean on why they literally took it all the way to the edge of the DL tool here. Makes it super clean. Okay. Now let's go back onto the higher time frame. Okay. Now, looking into this, there's a couple things that this could have that you could look at this. This could have been actually your third tap for the super hot time frame, which is your first, second, third. Oh, that's supposed to be red. This would have been your third tap, and now market makers are going to be shorting it very soon. Or you could have said that this is going to be your third tap right here, because market makers grabbed basically all of this liquidity here that they left behind back on that previous second tab deviation, right? See how it perfectly aligned right there. So you could have said that's the short, and then now currently we would be expecting, boom, comes up. Oh, so it's basically coming up, and then basically it just comes down. TP target would be end of range here at the $49, same place where market makers previously accumulated their positions. So that's the first scenario. Or we still have, or actually, another thing that adds on to this scenario that my friend pointed out that was actually very important was that, boom, besides this being a nice short for the mid time frame, that would have been called as your first tap, right? This is your first tap mid time frame. That would be considered the, let's make this orange. Let's make it orange. This would be another reason why it would continue on the high time frame going into mid time frame to short all the way back down here to the 50s. This is your first tap. Market makers perfectly wicked this right here. Very beautiful right there. Pull it up to that. Now that's your second tap. Boop. Now market makers, this right here is technically some type of short. This would be your third tap short. And then if we even go on like the super micro low time frame, as we can see, market makers are just fucking, they're just selling that. They are just selling that off. So if market makers don't bounce off of this demand here to reject to go higher, I mean, yeah, that shit's just, that's a goner, bro. That is a goner. So that would be your third tap continuation. And yeah, we're looking at $50 very soon. So that's basically scenario one. Scenario one, boom. Comes down. Okay. We'll label that orange since that's orange. Okay. So, and then the whole schematic would be complete. Or another thing that we can, or that can play out would be there's still this liquidity above right here. Right here at the $121. Market makers could, like we said before, instead of bouncing off the demand and then just rejecting off of some supply that they make before going for the lower high for lower low, market makers can instead bounce off the demand, come back up, make a nice clean liquidity trail, grab that deviation, grab that liquidity grab there, right? And then on a clean breaker structure, dump now back down. And now we're looking at to where we previously expected here at $50. I mean, it can go either way right now. It can go either way because it looks clean regardless. This would have just been considered then an extended Model 2. Or, this is the extended Model 2, but it can literally even go higher, grab all of it, and then now it would be considered a Model 1, right? And then market makers just make more bread off of that. So that's another option as well. So we have a internal distribution. It already confirmed here on the high time frame, so it just dumps back down, or it comes up to grab this last liquidity right here, or even this thing, but more likely this thing. Grabs this, now comes down. This is going to be now considered the Model 2, comes down, or it becomes a Model 1, deviates this tab, so now it considers Model 1, and then drops all the way down as well. All tool, beautiful P shape. This is very high probability. Let me delete this real quick so it's cleaner. Yeah, this is really clean. Basically, we have a nice P shape, volume, perfectly equivalent to where market makers are distributing, right? That's the theory. So more likely what's going to happen is that first scenario where it kind of just dumps right here. But this is only just basically showing that market makers are filling positions. Basically, they're filling hundreds of thousands to millions of positions here in this range of the range. So, it can go either way, right? Now another thing would be beautiful return of zone. Market makers are literally just stacking lows before lows before lows. So by the time it comes down, I'm expecting it just literally just shitting to the floor. There's no market maker demand here that market makers could bounce off of, or where price action could bounce off of. It's literally just low, low, oh, low after low, after low, after low. I'm expecting literally all these lines to just get perfectly just swept instantly. Yeah. The next thing, when if it does come down, right, and it does follow through, if it doesn't reject off of more of, if it doesn't bounce off of more of this demand here, and basically they took everything here, the next target for Starbucks would be all the way down here. Back to October of 2013. Oh, never mind. That's like Q2, Q3 of 2014. We're looking at it coming all the way down here to the $40 range. Pretty scary. Usually when big, how do I say this? When big moves like this happen for large corporations like Starbucks, usually I would look out for news. I would look out for kind of like the earnings on what's been going on. I haven't really been keeping up to date with Starbucks. I'm not really interested in what's going to happen because technically, even if it does, even if the second scenario does play out where it does come up and say best case scenario makes a Model 1, I mean, from $105 to $133, it's not really big of a move for me to really get into it. But for anybody that plays options, like basically if they play longs or puts, you know what I'm saying, that would be a decent play, and I would definitely get into some puts if market makers push price here to the extreme liquidity. But in this case right now, you'd be basically too late if market makers would be shorting right now.